Welcome to the Easy VC Brief. I'm Max von Polnitz, your host. I run a $100 million deep tech venture capital fund here in Silicon Valley, and this is your espresso shot of venture capital news, no jargon, no fluff. Today's pod is about a fintech darling, the prediction markets. Now, I want to be upfront. Fintech is not my world. I live in deep tech, semiconductors, robotics, advanced materials. But here's the thing about venture capital. Regulation doesn't respect sector boundaries. When Washington starts drawing new lines, every investor needs to pay attention. And right now, prediction markets are sitting at the center of one of the most fascinating regulatory storms I've seen in years. So let's dig in. What are prediction markets? Prediction markets are platforms where you bet real money on real world outcomes. Yes or no binary contracts. Will the Fed cut rates? Will this team win the Super Bowl? Will the US strike Iran? The price of a contract reflects what the crowd believes the probability is. The two companies dominating this space right now are Kalshi and Polymarket. Both seem to be pushing up against a $20 billion valuation. Kalshi was founded in 2018, is fully CFTC regulated in the US, and has raised roughly $1.7 billion in total. Polymarket, founded just in 2020 and crypto native, got a $2 billion investment from the Intercontinental Exchange, the parent company of the New York Stock Exchange, at a $9 billion valuation. And as I said earlier, is reportedly chasing the same value as Kalshi. Together, these two platforms saw $26.7 billion in trading volume in January 2026 alone. Yeah, that's just in 1 month. And the challengers are piling in. Robinhood just acquired a CFTC licensed exchange to launch its own prediction market. Coinbase, NASDAQ, and others are all exploring binary event contracts. This space is becoming mainstream financial infrastructure and fast. Why am I talking about this now? The Iran war. When the US and Israel launched coordinated strikes on February 28th, dubbed Operation Epic Fury, prediction markets lit up. Over $679 million had been wagered across Iran-related contracts. But here's where it gets uncomfortable. In the hours before the strikes were publicly announced, more than 150 fresh accounts flooded into Polymarket, betting heavily that the US would strike Iran by February 28th. One account dropped $60,000 and walked away with nearly $500,000 in profit. Blockchain analytics firm Bubble Maps identified 6 linked wallets they called suspected insiders, combined profit $1.2 million on near perfect timing. And this wasn't the first time. Senator Chris Murphy called it, and I'm quoting here, insider trading in broad daylight. Senators Merkley and Klobuchar just introduced the End Prediction Market Corruption Act, which would ban the president, members of Congress, and government officials from trading event contracts. A House bill is also in motion. It's about time. But I also want to address the flip side here. As an investor who thinks about information asymmetry every day, prediction markets are quite unique because there's a more interesting question buried under all of this. What if prediction markets actually one of the most powerful real-time intelligence tools ever built? Think about it. When 70% of bettors are suddenly piling into yes on a US-Iran strike hours before the public knows anything, that market is aggregating signals from thousands of people. Analysts, journalists, former officials, regional contacts, open source researchers. The crowd isn't always wrong. Sometimes the crowd knows. Polymarket said as much themselves. During the Iran conflict, their markets were giving people answers that TV news and social media simply couldn't match. This is the real tension. Prediction markets may be the closest thing we have to a live probability engine for global events. That's incredibly powerful and also incredibly dangerous in the wrong hands. For deep tech investors like me, the key question isn't whether these markets survive. They will. The question is what the regulatory framework looks like on the other side of the scandal and whether the government figures out how to stop the abuse without killing the signal. That's it for today's Easy VC Brief. If you found this useful, share it with someone who should be paying attention. I'll see you next Thursday. And as always, keep building.